Have you ever wondered how everyone around you seems to know something about money that you don't? Today, we're diving into the most surprising and shocking money statistics that reveal what the average person is really doing with their finances. Some of these numbers will change the way you think about money forever. The reality behind average money behavior. Most people assume they're doing okay financially simply because they look similar to everyone around them. But average isn't a benchmark you want to follow. In fact, the average person is dangerously unprepared for financial emergencies, retirement, and even basic money management. Here's the truth. When you compare yourself to the average, you're comparing yourself to someone who's usually struggling. Understanding the numbers isn't about judging people. It's about realizing where the real opportunities are. By knowing what the average person is doing wrong, you can do the opposite and put yourself on a much stronger financial path. Your advantage begins with awareness. Let's break down the numbers and extract actual steps that can move you forward. Actionable steps. Stop comparing yourself to peers. Compare yourself to goals. Track your net worth monthly, not just your income. Audit your spending to identify unnecessary habits that keep you average. 57% of Americans can't handle a $1,000 emergency. One of the most shocking statistics is that over half of Americans cannot handle a $1,000 emergency without using a credit card or borrowing money. That means a minor car repair, medical bill, or appliance breakdown becomes a financial crisis. This isn't a spending problem alone. It's a planning problem. Even if you don't earn much, building an emergency cushion is the first step toward financial resilience. A small buffer reduces stress, prevents debt spirals, and gives you leverage during uncertain times. The average person has no margin for error. Your job is to create that margin intentionally, even gradually. Actionable steps. Start with a $500 safety fund target. Automate $20, $50 weekly transfers to a separate high-yield savings account. Use unexpected income, refunds, bonuses, gifts, only for emergency fund padding. 63% of Americans live paycheck to paycheck. Even people earning six figures often live paycheck to paycheck. Lifestyle creep and social expectations make it easy to spend more as you earn more. The real issue isn't income, it's habits. If your expenses rise at the exact speed of your paycheck, you'll always feel stuck, no matter how much you make. The average household overspends in three predictable areas: housing, transportation, and food. These categories alone can destroy financial progress if left unchecked. You don't need extreme frugality, you just need intentional boundaries. Actionable steps. Keep housing costs below 30% of take-home pay. Drive a car you can fully pay off in 3 years or less. Meal prep 3 low-cost dinners per week to cut food bills by 20 to 30%. The average American has over $7,000 in credit card debt. Credit card interest rates now regularly exceed 20%, making debt one of the fastest ways to erase financial progress. The average person doesn't simply have debt, they carry it for years. This long-term balance drains wealth quietly, making it harder to invest, save, or build security. Paying off high-interest debt is one of the fastest guaranteed returns you can get. It's a form of investment where the gain is immediate and risk-free. Actionable steps. Prioritize balances over 15% APR. Use the debt snowball if you need motivation, or debt avalanche for speed. Call your credit card company once a year to request a rate reduction. Success rates are higher than you'd think. Only 1 in 4 Americans has any form of long-term investment. Most people don't invest at all, leaving their long-term financial security entirely to chance. Even those who invest often rely solely on employer retirement plans without any personal investing strategy. The average household significantly underestimates the power of compounding. By waiting even just 5 years to start investing, you miss out on what could become tens of thousands of dollars. Wealth isn't built by timing the market, it's built by time in the market. Actionable steps: open a Roth IRA or taxable brokerage account today, even with $20. Automate recurring weekly or monthly deposits. Choose broad market index funds like S&P 500 or total market funds for low-cost diversification. The average retirement savings at age 55 is only $120,000. This statistic is especially alarming. Most experts suggest that by age 55, you should ideally have 6 to 8 times your annual income saved for retirement. Yet the average savings is far from that. This means millions of people are heading toward retirement with no realistic plan to maintain their lifestyle. The biggest reason? People start saving too late or contribute too little for too long. You don't need huge sums to catch up. You need consistency and strategy. Actionable steps: increase retirement contributions by 1% every 6 months. Maximize employer matches. They're effectively free money. Reallocate portfolios every 2 years to maintain risk alignment. The average American spends $18,000 per year on non-essentials. Small habits add up dramatically. Entertainment, subscriptions, impulse purchases, and dining out accumulate into thousands of dollars. The average person rarely tracks these leaks, yet they often represent the difference between financial stress and financial stability. Cutting everything isn't the goal. It's about choosing what genuinely brings value and cutting the rest. Actionable steps: perform a quarterly subscription audit. Cap dining out spending using a fixed weekly envelope or card. Set a 48-hour rule before non-essential purchases. The majority of Americans don't budget because they think budgeting is restrictive. This mindset keeps millions stuck. A budget isn't a punishment, it's a permission slip. It's how you tell your money where to go instead of wondering where it went. The average person avoids budgeting because they fear limitations, yet those who budget consistently report higher financial confidence and lower stress levels. Budgeting isn't about spreadsheets, it's about clarity. Actionable steps: use a simple rule like 50-30-20 to begin. Track expenses for 30 days to identify real patterns. Use apps to simplify budgeting instead of managing it manually. Most people don't know their net worth. Net worth is the single most important financial metric, yet the average person never checks it. They focus on income, which means nothing without context. Someone earning $200,000 with $250,000 in debt is in a worse financial position than someone earning $60,000 with no debt. Tracking net worth helps you measure real progress, spot problems early, and stay motivated. This one habit separates those who build wealth from those who don't. Actionable steps: calculate net worth monthly using a simple worksheet or app. Track liabilities as carefully as assets. Celebrate progress even if it's slow. Consistency wins. Doing the opposite of average is your wealth advantage. The numbers paint a clear picture. Being average in today's world is financially dangerous, but the upside is huge. You don't need extreme discipline or perfect strategies. You simply need to avoid the pitfalls that most people fall into. By saving consistently, investing early, reducing debt, and tracking your financial progress, you quietly separate yourself from the crowd. Wealth doesn't appear overnight. It's built through small, consistent decisions that compound into life-changing results. The people who win financially aren't always the highest earners. They're the most intentional. Let these statistics motivate you to take the opposite path of average and build a future that's stable, secure, and full of opportunity. Actionable steps: commit to one small financial improvement this week. Choose one statistic from this video to reverse in your own life. Keep your financial life simple, automated, and intentional.